Hello and welcome everyone. My name is Mr. J.M. Kimani, a lecturer in Management Accounting. Welcome to Lesson 7 of the topic Budgeting and Budgetary Controls. Now this Lesson 7 will emphasize on the other budgetary systems, apart from the normal ones, which we call them as conventional budgetary systems or traditional budgetary systems, where you actually come up with a budget similar to the previous budget, you only make some few changes. We call them as incremental budgets, and the system is incremental budgeting, where if the previous budget was for 20,000, we expect in this year we are going to perform better, and therefore we increase that budget of last year to a new budget that is higher than that budget. But we may have other systems where we are going to avoid the incremental, the conventional system, and we come up with a traditional system or either changed systems. So these budgets are the ZBB and the ABB. Now, talking of these other systems, we can say that in traditional budgeting, previous year's budgets only incorporate changes expected in the current year. This is known as incremental budgeting. Incremental budgeting is concerned mainly with increments in cost and revenues that will occur in the current year as a result of growth or inflation. Although budgets will be easier to prepare, it is not efficient. It is an efficient form of budgeting as it encourages continuous wasteful spending from year to year, as well as budget slacks, that is, extra amounts in budgets. Now, what I mean here is that this system is easy, which is incremental budgeting is easy, but the problem is that we'll be carrying forward always any problems that you encountered in the previous year. You will not actually be able to avoid these slacks or these problems because you are working on the previous budget to come up with a new budget. So those are the problems that we are going to be having every now and then, and it is therefore not a good and efficient way of preparing budget. The above problems can be addressed through the use of zero-based budgeting. Zero-based budgeting system assumes that budgets for each cost item or cost center will be made from scratch or zero, and each item of expenditure included must be justified in total for it to be included in the next year's budget. Therefore, the basis of preparing budget is zero base. However, managers normally may not start from zero, but will ensure all items are justified. Now, we are saying that this zero-based budgeting, ZBB, we are saying that is a system where we prepare budgets from scratch, meaning the cost items, the revenue items, and even some activities, we prepare them from scratch. We actually imagine we have no experience on them. We did not have them previous years. So we do it from scratch. Just imagine of a company that has just been launched. It has just started the other day. It cannot have experience of such cost or revenue. It's the first time that company is actually having such kind of an experience. So the budget that companies will come up with is a budget that they have done it from scratch. They do their analysis. They must conduct some analysis, market analysis and production analysis and all that, to know their capacity, to know the customer's demand and all that. So the same case with such a company, even if it is an ongoing company, has been there for severally, we assume that we prepare this budget from scratch. But again, you know very well that we may not maybe we may not avoid the fact that we know of a particular cost. We have some experience of a particular cost. And therefore, since we cannot be able to maybe put that out of our mind, we are going to be using, yes, previous data, but again, we shall be scrutinizing each and every item so that now we can have it like afresh. Though not indeed like there is no such data, but we're actually going to be scrutinizing each and every item. So all in all, it is a good budget because everything is based on zero, and any inefficiencies that were experienced in the previous years shall not be transferred in the current years. So if we have either items that were there in the previous years and are not going to be there in the current years, we shall avoid them. If we have items that maybe were there in the previous years, that were not there in the previous years, but we are going to have them in these current years, we are going to add them. So it is important to have these kind of budgets where we are not depending on the previous year's budgets. We are having everything scratch, although it is a tedious exercise. Now, there are 3 steps of implementing zero-based budgeting as follows. 1, define decision packages. 2, evaluate the rank of each activity. And 3 is allocate the resources. So on the first one, which is define decision packages. What about this? What about this? These are specific organized activities which management can use to evaluate priorities for the current period. They are of 2 types: mutually exclusive and incremental packages. We have mutually exclusive, and number 2 is incremental packages. Let me explain that. For the mutually exclusive, they contain alternative methods of getting the same work done, and therefore selection is through cost-benefit analysis. And then incremental packages explains the levels of effort needed, that is, explain the minimum that needs to be done and the additional work to be done and the cost benefit of doing so. Now, first of all, in talk of defining the decision packages, very important, because this is like defining, let's say, like how to produce either bread or produce cakes. Produce bread or cakes. Now, the concern is that we may have such decisions which are mutually exclusive. You cannot produce bread and cake at the same time, assuming. It's just like a projects. We can't have project A and project B at the same time if they are mutually exclusive. That selecting one decision or one plan actually is going to preclude or exclude the other decision. That's now mutually exclusive. And for you to select a particular decision there, you must actually use a cost-benefit analysis. That you are going to select the decision that has a higher benefit than the cost. You're going to apply even the opportunity cost. That should you decide to produce bread and not cake, how much are you losing for not producing cake? That becomes the opportunity cost of bread. Opposite, should you produce cake and not produce bread, how much are you losing for not producing bread? And therefore, that becomes the opportunity cost of producing cakes. So you are going to make such comparison and you settle on the one that has a lower or a small loss. And that is how we are able to select that decision. There are so many things and so many factors that you may consider if you want to select 2 or 3 or more decisions. So whether it is about production, whether it's about taking this type of labor, whether it's about taking this type of supply, or whether it is selecting this supplier or not the other one. So such kind of comparisons, we need to actually understand, and if they are mutually exclusive, we must select the one that has the highest benefit, though the lowest cost. And there are others where you may have incremental decisions. Like the minimum you can get is this, but should you get higher than that, how much money do you incur? There are some cases that you may want to produce bread, but there are some minimum demand. And should you want to produce more, you must incur this cost to meet the demand and all that. So there are such kind of decisions where you are going to consider how much are we going to be exposed. Should we continue increasing? Because as we come up with a budget, we also have some pessimism and optimism. That if we settle on a particular level, which is a lower level because we do not know of the coming periods. So you want to know whether there is some space to make adjustment of that level of production or targets. So that increment, are we going to incur cost, and how much cost do we incur? Should we bear that cost? So that is what we need to consider. So all this about defining what decision and plans that we can consider as we are forming these budgets. Then the next one that I read as number 2 is actually the evaluating and ranking each activity. So this is part B, is evaluate and rank each activity. Now, this is for priority purposes, and whatever must be done would be prioritized. What ought to be done should be ranked after. That's true. Now, when we come to selecting an activity, an idea, a decision, automatically we must evaluate it for its benefit, its cost, and other consideration, and we end up ranking. So that now, sometimes you may want to produce 3 or 4 products, but you are not sure of the availability of resources. So therefore, you want to prepare in advance with the rank, with the position, so that now as you come to substituting, come to applying the resources, allocating the resources, you already have ranked and you know this is the first one to be allocated and I produce because it's the best. I go to if the resources remain, I allocate to the next maybe the next kind of decision. And when talk of the activity, actually it's about, like I say, labor hours. So this labor is an activity, and therefore we may not be having a lot of that, of the labor hours. So we need to actually rank some decisions where we are going to allocate these hours. That if you have hours, we are going to allocate to this product A. If hours remain, we're going to allocate to product B. That is what we mean by ranking. And ranking is very important because it's going to assure that, and it's going to enable us give some priorities to some activities, some resources, some decisions, and not getting confused when we start maybe allocation of resources, which is our step number 3. So this is number C, which is allocate. Allocate the resources. Now, on the basis of priorities, the available resources would be allocated and incorporated in the budget. Now, let me explain something here. When you talk of zero-based budgeting is where you are doing everything from scratch. And unlike what we had done previously, you know, it would be easy for us to just take what we did previously because all that procedure was done that time. But you see, things change. We may have given more priority on bread than cakes. But currently, our customers are more for cakes than bread. So now we need to change our priorities again. We may have started with labor-intensive production. But currently, maybe our production has become machine-oriented. We need to actually to be changing these decisions. And that's why we are doing this process. It's a tedious process, but again, each and every action or decision is being evaluated afresh, and we are able to allocate this to the production. And that is the point. If we had previous management which were not efficient in their maybe ranking and evaluating, we can have the current management who are maybe very vigilant in evaluating these resources and the activities to be carried. So that means, in a way, we give respect to the management of the day, unlike where we just carry forward what was done in by the previous management. So that's why the ZBB is a very good procedure of preparing budgets. Now, we do have the advantages of zero-based budgets. Now, advantages are, number one, it helps identify and remove inefficient or obsolete operations. Number B, it forces employees to avoid wasteful expenditure. Number C, it can increase motivation. Number D, it responds to changes in business environment. E, it helps in continuous appraisal of organization operations. And number F, it challenges the status quo. And lastly, it results in more efficient allocation of resources. Now, looking at these advantages, helping to identify and remove inefficient and obsolete operation, which is true, because like I said about the previous management and the current management, we can identify some activities which are not adding any value. We actually avoid them. If they're inefficient, they're obsolete, they are not longer adding any value, we remove them. That is why ZBB is important, because we are carrying that analysis with us. Now, next is about forcing employees to avoid wasteful expenditure, which is true, because we are doing everything a start. And if you are used to doing the same thing, wasting time and all that, we are going to maybe understand, and we are going to realize that is wasteful, and we are not going to avoid it, and therefore give some new targets and new measures. Next is that it can increase motivation, which is true. Well, even though it's a tedious exercise, but we get motivated because we are doing everything fresh, and what we are having as a budget is what we have just currently evaluated, and we have committed to executing such, and therefore it brings motivation. Response to changes in business environment, which is true, like I've told you about, and the changing situations in business. The demand may change, customer base may change, target customers may change, so that is, market can change. Next is that it helps continuous appraisal of the organization's operations, which is true. Every now and then we prepare this budget, we end up trying to evaluate the business operations, the machines, the capacity of machines keep changing, of course. When it's new, it can produce more and efficiently, but when it is old, it produces less and also inefficient way. And then also challenges the status quo. That's true. We don't just maintain that what we had is what we still maintain. We need to reevaluate ourselves and understand our capacity and our level of doing things. That is some note, and also results in more efficient allocation of resources, which is true, because this last step of allocating the resources, we are allocating having evaluated and all these procedures done. So we are actually very fair, and we can say that we are efficient in the way we allocate resources, so that we can get benefits from the same. Disadvantages include: 1, it involves a lot of paperwork. 2, short-term benefits might be emphasized, ignoring long-term benefits. 3, it might give the impression that all decisions have to be made in the budget, ignoring unforeseen opportunities and threats which may need immediate decision. 4, lack of management skills, so managers may have to be trained in zero-based budgeting technique. 5, information system may not be capable of providing suitable information. And 6, ranking of activities may be difficult. Common problems may include a large number of packages may require ranking. 2, difficult of ranking packages may be equally vital. And Next is difficult of ranking activities which have qualitative rather than quantitative benefits, like spending on staff, welfare, and working conditions. Now, looking at these disadvantages that we have out of paperwork, because every time we do this process and every item, every action, every activity of the budget need to be reevaluated and looked into, and therefore that's out of paperwork. Next is that short-term benefits may be emphasized, ignoring long-term, which is true. So long-term are things that go beyond a year or so. So when you're talking of evaluating every action is every month, every short period of time, we may emphasize so much on that short term, we forget about long term, which may not be able to make a decision, but we just forecast. We have another one that it may give impression that all decisions have to be made in the budgets, and ignoring some unforeseen opportunities, which is true. There are some things that we cannot tell in advance. We just wait until it happens, and then we are going to make a decision that time. But when we talk of we must make decisions at the beginning and we're coming up with a budget, it's like saying we are doing this one in finality. But you see, there are some things that we cannot be able to tell in advance. So we are going to wait until it happens. We make a decision for that time. That is the disadvantage. We cannot foresee every item at the time of budgeting. Next is that lack of the management skills. That's true. So management may not have this training and the skills to come up with this zero-based budgeting, and therefore they need to be constantly trained. Next is information systems may not be capable of giving information. That's true. We may not be knowledgeable. We may not be informed as we are coming up with this. Even that project or product we want to produce, we may not be informed about it, about its demand, its technicality. We cannot be able to tell everything about it, and therefore that becomes a disadvantage. Ranking of activities may also be difficult. Remember, first of all, it is not just one activity, it is several activities that we are ranking, because when it comes to this labor, when it comes to materials, when it comes to time, machine time, we are going to have some ranking, and this may be difficult because of either large number of activities or packages or decisions. Having multi decisions is a problem. Also, we may have problems of qualitative activities rather than quantitative. If it's quantitative, it's simple to rank and be able to allocate. But for qualitative, the employee motivation, the staff welfare, and other qualitative situations may be a problem to rank, and that is those are the advantages and disadvantages of zero-based budgeting. Then the next one is activity-based budgeting. So number 2 is activity-based budgeting, which is ABB. Activity-based budgeting, ABB. Now, it is the use of cost determined using ABB as a basis of preparing budgets. It is a method of budgeting based on activities and utilizing cost drivers data in budget preparation. It is based on assumption that business as a whole will need to be managed with far more reference to activities and cost drivers. Activity-based budgeting involves defining activities and using the levels of activities to decide how much would be allocated in budget preparation. Now, this is what I mean. That this is a budget which is based on activities when you are allocating the resources to the products. That you don't just allocate that this is the amount of money we are going to spend on producing product A, producing product B or C. We allocate based on the number of activities the product consumes. One thing and one of the principle in ABB is that the products consume activities while activities consume resources. Products ABC products consume activities. An example of activities are the labor hours, the machine hours, the number of setups, production runs, the number of deliveries, number of dispatches. All these are examples of activities. So it is the products which consume these activities, but these activities involve cost. Like now, the more the number of machine hours, the more the machine cost. The more the number of say setups, the more the setup cost. The more the number of dispatches, the more the carriage outward. The more the number of orders, the more the ordering cost. So these kind of costs are driven by the activities, and therefore the cost is on the activities, while activities are on the product. So therefore, we want to assign the costs, these resources, to the products, but through what? Activities. And that is the position concerning the ABB. Then it involves the following principles. 1, it is activities which drive cost, and therefore the aim is to control the costs, which is the cost driver. Number 2, not all activities are value adding, therefore each activity would be examined according to its ability to add value. And number 3, traditional financial measures are unable to fulfill the objectives of continuous improvement. Therefore, additional measures to focus on a driver of cost, quality of activity, etc., is needed, which is true. It's just like what I've just said about products actually consuming activities and activities consuming the resources. And we need to have that understanding so that we can be able to evaluate every activity and the cost that it actually consumes before we charge these to the products, and see whether the activity is value adding. If an activity is not value adding, like dispatching, there are some companies whose customers, they come for the products. You don't dispatch to the customers, so you don't deliver to the customers. The customers come for the product, meaning we have avoided that exercise of transporting to the customers. We can even minimize the cost, minimize the selling price, and you don't transport the goods. They come for the goods. That means if that activity of transporting the goods is not cost effective, we may end up, we better reduce the price and the customers come for the goods. If we do not, if we have been receiving goods in our premises, that we are avoiding carriage inward and that activity of transporting, we may actually end up incurring that cost of carriage inwards, but we go buy the goods in the premises of the supplier and we buy at a lower cost. So these are activities that may not be adding value, and as long as you can make more savings when you have the activities, then of course you better have the activities. But if you can make a saving without the activities, just dispense with the activities. The benefits of ABB: 1, different activity levels provide a good foundation for zero-based budgeting. 2, ensures that organization's overall strategy is taken into account when determining value adding activities. 3, the critical success factors during budget implementation can be identified as part of information control. 4, the focus is on the entire activities, and therefore it's more likely that the budgets would be implemented accurately. And 5, traditional budgeting focuses on nature of cost, while activity-based budgeting emphasizes on activities which causes the output. Now, when talk of these benefits is that we have different activity levels, which after understanding those activities, like now they have named the labor hours, machine hours, the production setups, the production runs, the dispatches, the number of orders, all that. If we understand them, automatically we're able to understand and be able to have the ZBB, because ZBB requires us to understand all those and evaluate all those activities. So ABB is a good basis and foundation of ZBB, because you are able to analyze those activities which are required in ZBB. Also talking of ensuring that the whole organization's overall strategy is to is taken into account when determining the value-adding activities. So that's true, because actually and the whole organization may be defined by the activities that is undertaking. And therefore, if you're able to understand those activities, then you're able to understand the whole organization. Touching on an activity is touching on the whole organization. Then talking of the critical success factors during the budget implementation is very important, because these are factors that actually define the whole organization. That when you actually do something on that activity or factor, you actually going to affect the whole organization, and they are those factors which make the company achieve the objectives. So you're able to understand them as you are doing your analysis. When talk of analysis, you're able to come across such factors, and those are the ones which define the organization. And talking of focusing on activities, and therefore becoming more likely that the budget would be implemented, actually, which is true, because if we have addressed the activities and which actually incurs cost, by addressing activities we have addressed the cost, and by addressing the cost, that means we can be able to support the production. So therefore we can be able to implement this budget very well, because we have already addressed the activities and the resources. Then also talking of traditional budgeting processes, focusing on the nature of the cost, while the ABB focusing on the causes of these activities. Instead of you just looking at the cost itself, the nature of cost, is it fixed cost, is it variable cost, does it change when this changes? Instead of addressing that, you can address actually on the activities which the product consume. That product consume what activities? So because that is what we call the cost drivers. The drivers of this cost are the ones we focus on, because if you address that driver or that activity, you'll have addressed the cost. And that is why we say that it may be effectively implemented. That's all about the ABC, ABB, that is ABB as a budget. Though we don't, unless otherwise, we do have such kind of information of a company that you can be able to come up with that kind of a budget of labor hours, budget of machine hours, budget of dispatches, budget of number of production setups, like that, budget of the resources, or as in what I mean, the orders. The only problem is that we'll just come up with that budget, but we can add those activities because they're not the same. The activities are not homogeneous. We cannot add them. What we normally do is that after coming up with the ABB, we now use what we call the ABC, activity-based costing, as a system of charging the cost to the products using the cost drivers, which are the activities. So that means we are able now to add the money value for every activity and for the product. That we can say, product A, this is total cost, and those costs have been absorbed using the cost drivers. Product B, this is the total cost, and those costs have been absorbed using the cost drivers. And that tells you that ABC now is the implementation of the ABB as a budget. And remember, ABC was done and we did in the topic of the cost accumulation, especially for overhead costing. So we did ABC. Then last but not least is the rolling budget. Rolling budget. We have number 3 is rolling budgets. Rolling budgets. That this is a budget which is continuously updated by adding a further accounting period, e.g. a month or a quarter, when the earlier accounting period has expired. The budgets are continuously updated by adding a period and deducting the earlier period, for example, a cash budget. Let me explain about rolling budget. Now, we have a normal budget, which is, let's say this is a January and this is December of a particular year. So we have a normal budget for a whole year. But we actually divide this budget into controllable periods. Let's say like in quarters, we can have this one is April, this is June, this is October. This is April, this is June or July, and this is October. Now these are quarters. These are 3 months. Now what happens if you have this kind of a budget? We can implement the budget, first of all, for the first 3 months. We implement here. When we implement the 3 months, we get what we call the feedback. We get the feedback. Meaning, we have now the actual versus the budget. So we have now the actual versus the budget. Now, it is this feedback that we are going to use to update the budget remaining for 9 months. So we update. We update this remaining part of 9 months because why should you continue having that budget which you already have seen in the 3 months? It is not attainable. It is so easily attainable. It is not making sense. It is actually so optimistic. So why should you have that kind of a budget? So what happens, you use the 3 months to update this remaining part of the budget. But in so doing, you also extend your budget for the next quarter, which is maybe up to like April next year. So by so doing, we have a budget of a whole year. These 9 months plus these 3 months you have added. You have rolled over your budget to the following year, the first quarter. Then again, you wait for these three months. So here we get again a feedback. And for this feedback, we are going to use it to evaluate and update this budget for 9 months. So we update. So from what you have seen in these 3 months, we update this budget of 9 months remaining. And again, in the so doing, we again add and attach the next 3 months of the next year, which is maybe up to June. Meaning what? So far, we are going to have a budget of 1 year. Again, updated. So it's now we are rolling over our budget to the following. And what we have found in this period, we roll it over to the next period to make adjustment. So we are actually updating with the feedback we are getting from the previous. Just like the way we have the cash budget, that the closing cash balance is the opening cash balance of the next period, like that. So that tells you that this budget is good because, number one, it will be updated always. And number two, we'll be having a budget of a whole year every now and then. Instead of us having a fixed budget, which we are going to implement for a whole year, and we are not going to update and actually extend it. It's just 1 year, when the maybe 1 year elapse. So we are going to, or a 1 year elapse, we are going to have our new budget again for a whole year. So it's like saying that in the month of December or in the month of November, we don't have a budget remaining. We must prepare a new budget of a whole year. But this one, you don't need to prepare a budget of a whole year. You'll be updating what we have and you extend to have a budget of a whole year. Now, the advantages involved are one, managers can reassess the budgets regularly and produce up-to-date budgets. 2, planning and controlling would be based on recent plans. And 3, budgets are likely to be more realistic. And 4, reduces the element of uncertainty in budgeting because concentration is on short periods. Disadvantages are time consuming. 2, involves a lot of effort and money, making the budgeting expensive. And 3, frequent budgeting might put off managers who doubt the value of preparing budget. That's true. Not every manager shares that feeling that is good to have the budget done every now and then. So this exercise, which is frequently done, may actually not go well with some managers. So therefore, it's a disadvantage. Also, it involves a lot of cost and time consuming. Those are some of the disadvantages. And advantages are, like I've said, about updating the budget and having a good budget, which is more realistic, and also a budget already for a whole year. As you normally roll over this to the next period. So that is all about rolling budgets, and that's all about these other budgets or budgetary systems like ZBB, ABB, and rolling budget. So that's all about the lesson 7, and we have come to the end of that topic, budgeting and budgetary controls. So we will go to the next topic, which is standard costing. We look at these types of standards as well as the number or either the variance analysis. So for now, that is it. But again, I would emphasize that you can read more on budgets. There's a lot involved in budgeting, but I've just given what is more important as part of the coursework. And it's just I'm just advocating that you can read more. They can read widely concerning budgets. There's a lot that need to be understood when it comes to budgets. You may be working somewhere and you require to have this knowledge of budgeting. So it is up to you to extend that knowledge. But for now, that is it. We meet in the next topic. Thank you and God bless you.